So, Jamie, there's a lot of confusion in our industry across the world, really, about whether or not timesheets even matter. A lot of firms that we talk to don't seem to think they matter or don't have them. Even firms that I've met who do have them, I think kind of underrate how important they are in running the firm. I'd love to pick your brain a little bit on why we think they're so important at Wise. Give us the context, and then we'll jump into some of the things we get out of having timesheets.
Yeah, thanks, Tim. Yeah, look, I think to give the topic context is if you're going to grow your business, then you need some form of way to measure performance. So when I first started working with Ed a few years ago,
Mm,
I think I was moving away from timesheets at the time, and I was influenced by the concept of value pricing, fixed pricing as well, Tim, and then
mm,
pricing up front and all those sort of things.
mm,
And so when my firm was smaller, I might have had 5 or 6 people at the time. Um, I could I could probably manage it like Ed Chan used to say with brute force. So
mm,
if I had say 4 people, I could be in the office. I could see what they were doing every day, and myself, I was probably really driving the deadlines, to get the work done and out the door and get the invoice done.
mm,
um, but then when I started working with Ed, and I started sort of working more hours and just doing it by brute force and more clients and more clients. Ed taught me this concept of bottom up management,
mm,
um, which in essence meant that I needed a system
mm,
to know, how the team was performing, but at a greater detail how each individual was performing as well.
yeah.
And it's so the more people you get, the more chaos can occur, and you just can't spread yourself everywhere,
Mm,
Tim. Like
mm,
if
mm,
you're doing 30 or 40 hours a week and then you start moving into 50, 60, and 70 hours, I literally spoke with a chap the other day who was doing 70 hours a week, and it's just not sustainable.
yeah.
Um, so this sort of debate around timesheets has been around for a while now, and I think to a big degree, some people just don't like doing it.
Mm,
They just simply don't like the task
yeah.
of completing a timesheet, which is fair enough. There's all things that we don't like doing,
Mm,
but also it probably some people may not like the level of accountability it brings because you're literally saying what you're doing every day.
mm,
So there's a lot of debate about toing and froing, and then well, how does fixed pricing, why do you need to do a timesheet if you're fixed pricing? Because the traditional you know time billing model is you track every 6 minutes, you track every hour, and the traditional model is that's how you bill the client.
yeah.
Now, if you talk to Ed Chan, he'll say it doesn't matter either way, as long as you manage the client's expectations and you've got bottom up management.
Mm,
Um, so that's where you sort of get this dichotomy or argument or debate from different industry specialists who
mm,
say that just throw the timesheets out. You don't need to do timesheets.
mm,
Versus someone say like Ed and Wize will say, well, if you want to grow your business to a certain point and have economies of scale and have a bottom up system of management, then you need timesheets. So
mm,
yeah, there can be a lot of debate around whether to do timesheets or not, and be interesting to see what our audience's thoughts are on the topic.
yeah.
But like at my own firm, everyone does timesheets, and I think half of our revenue would be fixed feed.
Mm, mm,
Half of our revenue would be fixed feed, and the other half's time billing. So and that's just simply because over the last few years we've purchased firms who are still in that time billing model,
mm.
and it doesn't happen overnight to change that to a fixed billing model. That's a change management thing. You got to be careful with the clients. Yeah.
Yeah.
So yeah.
No, there was so much stuff you just said there that I love to unpack. If we've
Mm,
got time, yeah, there's so
yeah,
many
yeah.
things there.
Yeah.
Jamie, we always say you spoke a lot about, the wisdom of building it right now. So when it scales, it's still
Mm,
manageable, right?
yeah.
And we love to say at Wise, you can't manage what you don't measure.
Mm-hmm. Mm.
Would you say timesheets are a way of measuring people's productivity or capacity? I'd love to hear you take us through. We always say we've met some people quite recently, some firms that have way too many staff.
Mm.
And the way we know that's from productivity, but how do you measure if your staff are your biggest cost? How do you measure that if you're not doing timesheets? How do you know if they're productive or not? I'd
Yeah.
love you to take us through a bit of that.
Yeah. So I think
Yeah.
some of the foundations when you're building a firm um, is in capacity. So, if you start at sort of this foundation to work out, well,
Mm.
what is the capacity of your business in terms of, what work it can produce? Um, so, it starts with that foundation of the capacity planner. And so you got to ask him, well, what's the capacity planner built on? Well, it's built on sort of around three things: what every person is getting paid,
Mhm.
so salaries,
Mhm.
so firstly salaries. Secondly, what what's the productivity of each individual person? So how much out of their 40 hours a week or 8 hours a day, whatever it is, how much of that time do you want them spending on client work? So actual client work or productive work versus non
Yeah.
billable work, which is easy to do, like admin and all that sort of thing. And then thirdly, it's a function of the charge out rate, so they're really the three things. And so everyone often asks, well, how do you get their productivity level? Well, that depends on their role.
Mhm.
Are they, essentially at a high level, a finder, minder, or grinder? And depends on the team size then too. The next question then is, well, how do you set the charge out rate? So the charge out rate is a factor of the salary. It's a factor of the salary of the person, because you sort of want to obviously cover the person's salary, Tim. So in terms of your invoicing, you want to cover the person's salary.
Yeah.
The second one is you want to cover the overheads of the business as well, because you'll have that. And thirdly, you want to allow some for the owner, the profit.
Mhm.
So the charge out rate should be a reflection of that. And, the old rule of thumb that I've heard for 20 years is, three times the salary. Now, that doesn't totally stick true in a
Yeah.
team environment. And then offshoring sort of changes can, change that again as well.
Mhm.
But the other factor of the charge out rate is, well, what's the market value? So if you're in a capital city, if you're in a regional area, so the market value as well is also a reflection of the charge out rate as well. So it's sort of those three things. And if you take those things into account, then you get the capacity of the business. And it was like this week, Tim. We were in a session,
Yeah.
and a particular person. What happened was they just hired and hired and hired. And I said to the chap, "Why did you keep hiring?" He said, "Oh,
Mhm.
everyone just said kept telling me that they were busy, so I just kept
Yeah.
hiring." The problem was, um, we had no profit. We had no we our cost of goods sold. So in an accounting and bookkeeping firm, our cost of goods sold is the wages, which is the most important KPI there is. It's your biggest cost in your business, and
Mhm.
that's the one you got to control.
Mhm.
So there's a great ebook that Ed and I and the team had wrote called Accountants Profitability Secrets. So if you're here and you haven't got a copy of that,
Mhm.
put in
Oh,
the
wow.
chat to
Yeah.
grab a copy. But essentially, Accountants Profitability Secrets ebook goes into this deep dive of why we track time.
Mm.
Why we track time, because essentially, even if you fix fee, you're not doing timesheets, everyone, to track the amount of money that you're going to bill a client. You're doing timesheets to track efficiency, right? Because the simple thing is, in the fixed pricing world, if you do a fixed price, for example, and you know you allow, say, 5 hours to do the job, but your team takes 20 hours,
Mm.
then where does the rest of that time go?
Yeah.
So essentially you're not going to make any money because you can't go back to the client and say, oh, sorry, Mr. or Mrs. Client, um, we've gone over time in this job, so we're
Yeah.
going to have to bill you more.
Yeah. Yeah.
Right. So you can't, you can't do. You might do that once a year adjusting the
Mm,
engagement, but that's
mm,
in
mm,
maybe 9 months' time. So
mm,
what you've got to do, the bigger you get, is try and make sure that you're doing jobs in time, in the budgeted time.
mm.
So, well, why do we do timesheets? Because we've got a budget, so the first art of delegation is, what are the outcomes that we desire? And the first thing should be, this is how long we've got to do this job. The reason we've got this long to do the job is so that we make this amount of profit, so that the firm is successful and we can pay wages and we can pay overheads and the owner gets rewarded. So in the fixed fee environment, it's not to bill the client; it's to measure your own efficiency.
Yeah. Yeah.
Um, and if you can't bill the client that time, Tim, that's what we call a write off,
Mm.
right? Because you just got to write off the time. You still have to pay the staff for the other 15 hours, don't we?
Yeah. Yeah.
So, and while you might have a small team, you might be able to manage that by brute force in a smaller team.
Mm.
But trust me, once you get to, 10, 15, 20 people, you don't have the time, Tim. So you need that system of bottom up management to understand the deficiencies or the weaknesses in the team. And then from there, you can drill down into, for example, the clients that aren't profitable.
Mm.
And the clients that aren't profitable, our KPI is that the wages need to be, 40%, for example, of the revenue, and
That's it.
the gross profit needs to be 60% as the KPI. So, and there's tools that you can do that. There's a lot of practice management tools around the world. The one that we use, for example, is Zero Practice Manager.
Mm.
From my point of view, is very good because we can look at, if it's set up correctly, you can look at the cost of goods sold per job, per every job.
Yeah.
You can see what the cost of goods, you can see what the gross profit is, because when the staff put their time down, it allocates a cost per hour of the staff, because you can put the salaries in, you can put the charge out rate, you can put everything in. So, you know, things, people don't tend to track, um, they don't tend to track metrics when everything is really good and rosy, like when,
Mm.
when
Mm.
there's money in the bank and everything's going well. It's more when you've got a team or individuals who aren't performing, that you need to drill down and find out what's going on. Why are we taking double the time to do this job or to work on this client? And in that ebook, I think that we've popped there in the chat, Ed and I talk about the 8 or 9 reasons that you might go over time, or that that you have write-offs, because write-offs are the worst thing that you want to avoid,
Mm.
because you're just paying staff essentially, and not billing
Covering.
for their
Mm.
time,
Yeah.
because all the people that I work with, in the different countries with Wize Mentoring, essentially when someone gets hired, what's the first thing you put on your job advertisement? How many hours a week? People get paid for time. It doesn't
Mm.
matter who you are.
Mm. Mm. Mm.
How many hours a week do you want me to do? What's the salary? Well, you can break
Mm.
that down into a cost, so you want bottom up management so that you can run your business without brute force, because you just don't get time. So you want systems that
Mm.
help you identify where you're making money and where you're losing money, but at a job level. You have to do it at a job level. Um, so yeah, the flip side of it, Tim, is the old time billing model, and again, that's where you do the timesheet so that you can then bill the client.
Bill.
And
Yeah.
yeah, so and if you can bill the client, that's fine, and that's the old time billing model. But the important thing is in all of this, that you manage the client's expectations.
Mm.
If you can, what do they say? Under
I
promise
promise. Yeah. Yeah. Over
and
deliver.
over deliver,
Yeah. Yeah.
normally you'll keep people pretty happy.
Yeah.
Yeah, yeah,
So that's some, hopefully it's challenging your thinking or clarifying your thinking today. But the big takeaway for me, Jamie, is doesn't matter if you're fixed fee or time-based billing, it's essential that you manage and
Mm,
measure WIP write-offs, and you need charge
yes.
out rates to do that and timesheets to do that, you know?
No, I was just going to say, sometimes people who fix fee
Mhm.
will look at me and say, "Oh, Jamie, I don't have write-ups or write-offs," but the fact is, they do.
It's hidden, right? Yeah.
It's if you
Yeah.
if you, you don't know what you don't know. So if you're
Yeah.
not tracking it, not going to know when you take too long on jobs. If you
Exactly.
don't set budget or targets for jobs, and then you don't track it, and then you're actually in a worse environment because you're driving along in your car and you've got your blindfolds on. So
Yeah.
yeah.
What to fix. Yeah, it's so critical.